Hey, what's going on, Cashflow hackers? It's Chris with Life 180. I got my buddy Danny here. We are in a podcast studio here in Gilbert, Arizona, and we are talking about whole life insurance. This is part 2 of our 3-video series of different types of life insurance. Last time we covered term. Today is whole life, and next one is going to be IUL. But today we talk about whole life insurance. This is my bread and butter. This is what I love. And we just got done talking. It was supposed to be a 20-minute interview, and it ended up being an hour and 20 minutes or something of that nature because honestly, Danny's just a great conversationalist, and he pulled out a lot of great questions, and we just had a great talk about it. So I'm telling you what, watch this. It's probably the most comprehensive conversation I've ever had around whole life insurance, and it was awesome having somebody who works so deeply in the business with me and with clients every single day, doing it old school. He runs 25 appointments a week live with people across the kitchen table, and so being able to have him pull these questions out and like get this information out and have this dialogue was probably one of the most fun conversations I've had. So I know you're going to enjoy it. If you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video if you like this. So we'll see you in there.
This is a real honor for me because I get to sit down with one of the gentlemen who's been a mentor to me in the whole life insurance space. We're continuing our series on different types of life insurance, the frameworks you can use to apply them to your life to figure out who's selling you what online, what you're learning about, where you really need to be with your life insurance situation. I have my good friend Chris Kirkpatrick from Life 180 here.
What's up, man?
So glad you're here, man. This is fun.
It's fun to be back in Arizona.
It's amazing that you made time for me on your visit here.
Thank you for setting up this awesome studio. We got this place. And so, yeah, today, we did this last video talking about term insurance, and we're doing this series on different types of life insurances and the different use cases for each one because there's so much misinformation out there. And obviously, this is going to be my favorite video because this is kind of my world, is whole life insurance. And I would say the biggest thing that I always say to people is that it's not whether it's good or bad. You know, you got all the Dave Ramseys and Susie Ormans out there that love to rail against whole life insurance. Yep. There are other people that are on the whole life insurance side of things that will tell you that whole life is a secret tool the wealthy use to get rich and like all these things. Both of those people are wrong. Yeah. You know what I mean? Like it's both, and like everything else, it's the pendulum, and like usually on the outskirts of everything, it's too extreme one way or the other. And it's not whether it's good or bad. It's, it really comes down to, is it in alignment with your values and beliefs? Is Stephen Covey always says, you got to start with the end in mind, or he always said, when he was alive. And he wrote the book 7 Habits of Highly Effective People. And one of the habits was beginning with the end in mind and reverse engineering a plan to get there. And so to me, it's like the reason I love whole life insurance is not because I love whole life insurance. It's because I have a long-term vision. And for me, my values and beliefs about what I want my long-term vision to be, what I want my legacy to be, what I want my life to be about, what I want to create for the next generation, for the next multiple generations, for me, and I know it's not the same for everybody, right? And so that's why I don't believe in trying to push a product. I know a lot of people like maybe watch the Life 180 channel and they're like, oh, Chris just sells whole life insurance. And I've had people ask me like, they've told me they bought term insurance. That's why I'm glad we're doing this. Yeah. They told me they bought term insurance from somebody else because they didn't think I did it. And I'm like, what? Like, what are you talking about?
Well, you are a specialist in whole life, but I can see how, that's interesting.
But that
you're like, you could ask.
So at first, but really, I took that as like, I'm doing something wrong. I need to communicate, and this is where I've learned. This is where if you've watched my channel, you've watched the evolution of content, is because I take that feedback very seriously, right? Yeah. Like, and I'm like, somebody hears me or somebody says that to me, and then all of a sudden you're gonna watch 10 videos on term insurance over the next 3 months, because it's important. Like, and so we just did that video on term insurance. If you haven't watched it, I'll put it on the end screen. You can go check it out at the end of this video. I really encourage going to do that at the end. Definitely. But whole life insurance, the reason I love it is because by definition, you have it for your whole life. You have it for your entire life. So it's guaranteed to be in force on the day you die, as long as you pay your premiums and you get through everything. And so starting at the end, the thing, I got into a little bit of a heated conversation with somebody the other day. I won't say an argument, but a heated conversation. And they were trying to convince me that they didn't need life insurance when they were in retirement. And they didn't really care about leaving anything to their heirs and to their kids and
Yeah.
like all that stuff. And I said, that's fine. We obviously have a different set of values from each other. And if that's your values, then I'm not the person to work with.
Yeah.
Like, and that's like, cause I'm not gonna back down from what I value and believe. And that the way I look at things is I want to work with people that share my values and beliefs, that I mean, maybe not identically,
Sure.
but people that at least prioritize the things, in a very similar fashion
Yeah.
that I do. And I would say, and the argument, I'll call it an argument.
Okay.
It really came down to this, is like, all right, let's pull a hypothetical poll together. It'd be really cool to do this poll.
Okay.
It'd also be like an impossible one and probably a really sad one to try to accomplish.
Okay.
But if we could go to every 80-plus-year-old in the world that was on their deathbed right now, like literally knows they're within 2 days of death, in hospice, in, just, how that goes. I mean,
I'm in it every day. Yeah.
right?
Yeah.
It happens. And unfortunately, like my grandmother died last week.
Oh, I'm sorry to hear that. I didn't know that.
Yeah, it was, she was 83, had a massive stroke, and boom, gone.
I'm sorry.
Yeah, it was, surprised, but 83 years old, and for her it went fast, which is a blessing and a curse, obviously.
Yeah.
But a lot of people don't go fast. My grandfather, when he died when I was 18 years old, he had cancer, and I watched him waste away in his hospital bed. And if we were to, so getting back to the thing here, I just went down my own little personal path here
No,
for a
it's
second.
okay.
But if we could interview everybody on their deathbed and just go to the people that didn't have life insurance, and they knew they were within 2 days of death, what percentage of those people, if I went to them and said, hey, how much would you like to have right now if you could have it? What do you think they'd say?
As much as I can get.
Right? And so it's really hard, like with all these people that are just like term, absolutely, start with it. Cash flow, like watch the last video, it'll make sense. But nothing beats whole life. Not everybody's ready for whole life right now. So it's systematically, how do you get it? When is it the right time
When you
for you
say
to get it?
nothing beats whole life, break that down into context for people that are watching, right? In comparison to term, or in comparison to other types of life insurance?
So we're going to get into all the benefits of whole life,
Yeah.
and all the things and
excited
the
about it.
reason I love it.
Yeah.
But I'm going to say, just for now, because it's going to be there the day you die, guaranteed. And not, by the way, no other there are other policies that will do it.
Yep.
But no other policy will be guaranteed to be there like whole life with you and provide a lot of other benefits that go along with
I
it.
like that. Okay, so because
Right?
it has, it does have a lot of other benefits.
A lot
that
of other
we'll be able to do
benefits,
that.
right? And so that's the first reason.
Yeah.
Garrett Gunderson just wrote his second version of What Would the Rockefellers Do. I licensed with him. I partnered with him. I wrote the foreword. We're doing all sorts of content around this. In that in the book, he interviewed the person who runs a family office for the Rockefeller family, right?
That's amazing.
Which is cool.
It's very cool.
And
A lot to learn there.
right? And in that, like, the cool part is like you start to realize, what do wealthy people do? I mentioned before, I don't like it when people go, oh, whole life insurance is a secret tool the wealthy use to create their wealth. No, it's
Right.
not. It's just the tool they use to backstop their wealth and to make sure that their wealth stays there, and to make sure their wealth transfers from generation to generation, and to make sure that there's a system to ensure that your kids don't screw it up.
Yeah.
And so to me, that's what this is about. And I wrote a book called Cashflow Hacking. And that's what, when I first got into this business, I've had an evolution since then. When I first started selling whole life insurance, I fell in love with it, not because of the death benefit. I'm going to be honest. I was 33 years old, 34 years old. I didn't care about the death benefit at the time. I had a term policy at the time. I had a newborn, like a 2-year-old at home, basically. when I first started doing it. I was like, I got my insurance. I'm good to go. Look at this cash value. We want to start investing in real estate. We want to do all this stuff. Look at the benefits. And that's what I did. And so from that perspective, I started being a raving fan of whole life insurance because of what it would do for me right then and there, right? And I think there's power in that because of the fact that most people have a microwave mindset. They want what they want, and they want it now.
Yeah.
They want to hit the 30-second button to cook things and just get it done. I'm more of a toaster oven guy. You know, I like to take my time. Toaster oven, the reheated pizzas, guys.
Yeah.
Don't microwave that stuff, right?
I'm a skillet guy.
Okay, fair enough, fair enough. But like, I would say, you know, for me in that moment, like it solved my problems. Then I wanted a place where I could save my emergency fund, right? I wanted a place where I could have money that was liquid, accessible, that I had control of it, that I could leverage for different opportunities.
That's safe,
right? That's going to beat inflation from a long-term perspective. That's going to outperform a savings account from a long-term perspective. And when I looked at the fact that it had other benefits, remember, I'm not talking about how I feel now. I'm kind of sharing the evolution.
Yeah, you're going back to when you learned this.
Back then, I was just like, I want what I want and I want it now. And this thing is going to solve my problems for me now. It's going to give me my emergency fund. It's going to give me my opportunity fund. It's going to allow me to save up to do real estate. I can leverage it for real estate. I'm going to beat my savings. I got all this stuff. Boom, I'm in, right?
Yeah.
And so that's what I did. And, you know, the fact that living benefits were attached to it, you know, if I became critically, chronically, or terminally ill, I could accelerate the death benefit and access the death benefit, you know, to pay for alternative treatments, which is great. If something tragic happened to me, I have my term insurance and my whole life insurance, and that maximized my human life value, my potential net worth.
Nice.
And so if anything happened to me, boom, self-actualized. I always like, and what I mean self-actualized is like, well, let me ask you this. Why do we do what we do? Right? Like, why do you do what you do?
I'm on a mission to serve people.
Right.
Yeah.
Okay. You're on a mission to serve people, and so am I.
Right.
But I'm gonna be a little bit more narcissistic about it.
Okay.
Okay. I love people. Right?
Of course.
I want to help people.
Yeah.
Right?
We're making a living too.
Sure.
Yeah.
But for me, what I love about what we do is that I want to help my family. Right? I love the fact that I know I'm doing something and that my financial plan, my strategy, if you will, between real estate, our private equity fund, the life insurance that I have, it's what I call a self-completing plan. Because I've got my real estate, I've got my investments and all that stuff in my businesses and stuff. Like, to me, that's life, right? Like, I'm doing that. Some of it's for me, right? Some of it's for fun.
Yeah.
Some of it's for the challenge. Some of it's like, you know, some of it, sometimes I question why I'm doing it. But like, that stuff is what it is. But when I think about why I'm doing it, I go, well, quite frankly, I enjoy just like living life. And so it's a balance, right? And so for me, like, freedom is important. Spending time with my wife is important. Having lifestyle freedom is important. And it's one of the reasons I've stayed the path that I have and not gotten a job with like a major mutual or something like that, because I'd be owned and I wouldn't want that.
Right.
And so, you know, when I look at utilizing whole life insurance and a blend with convertible term insurance, right? Because then you have a strategy to build your cash flow, or buy your net worth and build your cash flow, right? So over time,
I really like that, by the way.
Over time, you have a strategy as you become more successful to convert it, and you're guaranteeing a result, right? And that's amazing, because and so this is the part when I say people go, oh, whole life insurance is a secret tool the wealthy use to create their wealth. No, it's not. It's a secret tool to make sure that when you build your business and you make your wealth, you don't screw it up. Like, that's what it's about. Because how many people do you know that have built a business and then lost it?
Yeah.
How many people do you know that have had?
It happened to me.
How many? Right. Thank you for the honesty.
Yeah.
No, it's happened to me too. Like it's happened to everybody.
No, it's a badge of honor. Like you learn, you
it is
grow,
what it
you
is.
go again.
You
know?
talk to
And,
any entrepreneur that says they've never lost money in a business or had a failing business,
Yeah.
they're not an entrepreneur. Like they just like it is what it is.
Yeah.
Elon Musk has businesses that fail.
Yeah.
You know, he's just got a bigger burn rate. You know, like, and to me, I look at whole life insurance as the self-completing plan. It is what I want to happen. I guarantee that what I want to happen will happen when I want it to happen, whether I'm here to see it or not.
That's amazing.
And so
Who doesn't want that?
I mean,
The
only people that
depends on
don't
your values. Depends on what your
so this is
priorities
why.
are.
So when I say I'm going to be a bit more narcissistic,
Yeah.
to me, I think the beauty of this business, and if you're a life insurance agent watching this, I really, really encourage you to think about it in these terms. Okay. And when people go, Chris, how are you so like passionate and doing what you do, and how do you do what you do, how you do it, and all these things, and communicate about these ways and whatever? Because I believe in this stuff so much.
Yeah.
And I just think, for me, I didn't get into this because I wanted to sell life insurance. I got in, I got out, and I came back because I love it so much.
Yeah.
Because the strategies make such an impact on my life. Because all that, and for me, I go, I'm doing what I'm doing for my family, and I know the impact and the ripple effect generationally. I know that 4 generations from now, my great grandkids are going to be like, man, great uncle or grandpa Chris, or whatever, grandfather grew up in a trailer park, and there was nothing, and ever since then, like, look at this.
He was a visionary.
Yeah, and look at all the things. Like, look at it. It can start with you, and my encouragement to everybody watching this is like, no matter where you are. People say whole life insurance is for rich people. No, rich people use whole life insurance because they don't like to pay taxes. Whole life insurance, whole life insurance is for everybody. It might not be for you right now, but I would argue if your financial strategy doesn't have a long-term plan to integrate whole life at some point in time as you build your cash flow, because make no mistake about it, your greatest financial need isn't a better investment with a bigger rate of return or whole life insurance or anything of that nature. Yeah. Your greatest financial need now is more cash flow. So whatever you got to do to get there, figure it out. That's a whole different video we could do later. Yeah. But I would say for me, the reason I love this and the reason I say it's narcissistic is because I just do what I do for me and my family, and why I love it. And I just want to share that with other people. The fact that we get to just benefit from sharing this amazing information with other people, and is one of the reasons I love this business. I mean, where else can you find the ability to get paid in a fashion that's directly correlated to the value and the impact that you make in the lives of the people that you're serving?
It's amazing.
There's nothing. It doesn't exist.
Yeah, it's a very important job.
And people don't take it seriously enough. And I think, side note, this is going to be a little bit of a tangent, but and on the whole life insurance video, but I think one of the challenges in this business, in this industry, is that too many people are getting into the business because all these IMOs are pitching the attain financial freedom and reach out, like all these things. Yeah. And if you're getting into the business for that, then you don't understand this well enough. Please just stop, hit the pause button, really learn the products, do it yourself, make sure you have your own plan in place, make sure your financial foundation is built so you are the asset you need to be able to serve the people that you want to help, right? Too many people get in this business because they're looking for financial freedom and they want all the benefits that come with it. But if you don't understand what you're trying to do either, and you're not doing it for yourself and you don't believe in it in your heart of hearts, you're either going to struggle because you're not going to connect with people and it's not going to be an authentic experience. And so it's going to lead to a lot of heartache for you, and you're going to make a lot of mistakes, and you're probably going to trust in the wrong people and all these things. Or you're going to just be disingenuous and you're going to be selling things, you're going to be hurting people. Like, so that's my little tangent. But
It was a good tangent.
thank you. So with whole life insurance, I would say that I got that from Don Blanton, by the way. The whole life insurance is the only product in the world that will make sure what you want to happen when you want it to happen, whether you're here to see it or not. And
Shout out to Don.
yeah, he's awesome.
Legend.
Totally. And so I mean, I love that. And so when I look at my evolution,
Yeah.
it's been interesting because my evolution with whole life insurance and how I view it, how I use it, has been as I've grown. I've been in the business for a decade and a half now, and I've changed a lot. My lifestyle has changed a lot. My life circumstance has changed a lot.
Yeah.
I now have 3 kids. When I got in the business, I had none. You know, they're at different stages of life. I got my daughter's going to be a teenager. Holy crap.
Yeah.
You know, I've got a 5-year-old. So the range is fairly sizable. 8-year gap between the first and the third. And, you know, I mean, it's okay. And what I look at for this is that, and this is how the reason I love life insurance, whole life insurance, is because it's and ironically, the reason I love it is because it's polar opposite to what everybody says. If you hear anybody talk about whole life insurance and they rip on it, what's the number one rip?
That it doesn't grow well.
Doesn't grow well, and
it's expensive.
It's expensive and it's inflexible.
Yeah, that's rigid.
Right?
It's
rigid.
what they call it. Yeah.
Rigid.
Yeah.
Right? So,
which, by the way, was that an adjective that was coined by an agent selling a different type of life insurance, like the rigid?
Oh, probably. Yeah.
I always wonder that.
Somebody selling IU. No, like I think. I mean,
you hear that word a lot when they refer to whole
rigid.
Life. Yeah, I hear that all the time.
Yeah, probably.
Yeah.
I mean, my guess, probably A.L. Williams or somebody back in the '80s did that or something like that. It's like you get stuck with these huge premiums or whatever. But it doesn't need to be that way.
No.
Either. There's a lot of flexibility if you design a policy properly. But this is like my evolution, and if you watch some of the content on the Life 180 channel, you start to see I share, like a lot of the content I create is just me sharing my own thoughts and my own experiences and my own processes. And, you know, I talk to a lot of people and I have my own experiences and I do my own investments and I run a private equity fund and we just bought a hotel and we invest in other real estate. We've done flips. We've done all these things. And like, so the content is just me sharing a lot of my own life kind of case scenarios and my own conversations with people that I have with people. And I kind of, you know, walk through all that and share it. But when I look at whole life insurance at its core level, it's the most flexible and versatile product in the entire financial industry.
Wow.
And the reason I say that is because, is it fair to say that, and I'm going to use you as a case study.
Okay. I want to also add to that, also
Go ahead.
possibly misunderstood product too.
Misunderstood. Totally. Absolutely the most misunderstood.
Yeah. Amongst financial professionals and
Totally.
people, consumers that are buying these products.
I'll tell you, 75% of the whole life agents, the life insurance agents that I talk to don't even understand it.
Yeah. That's scary.
It's really scary.
They're the people responsible for educating the people
Yeah.
who aren't supposed to
It's
understand
really
it.
scary.
Yeah.
It's really scary.
That's why we're doing this video, to
Totally.
help give clarity.
Totally.
And context. So what's your case study? I'm curious.
So the
as
case
to-
study
yeah.
is this. I want you to hop in a time machine.
Okay.
I want you to go back, talk to 25-year-old Danny. Okay?
He was much cooler.
Was he?
Now I'm a dad.
Yeah.
My cool factor is
So at 25 years old, is it fair to say that you had different needs?
totally.
And is it fair to say you had different desires?
Yeah.
What were you thinking about back then?
I didn't have kids. I was my first year of marriage. We had bought a house already.
Okay.
So I was kind of I was starting to think about building wealth at that point. I remember I came back from my honeymoon and that was like the main thing I was journaling was like when I get back, like we just spent a ton of money on the wedding, you know, classic like early 20s, all the mistakes, you know, I was like, I want to build wealth. That was like I can remember thinking that like very clearly. That was my focus.
So fundamentally speaking, when you build wealth, what is the most important thing to do when you first start building wealth?
Make sure you have your security in place. You know, and the things that you need to have happen so that you can be successful building wealth, like an emergency fund, your insurances, things that are going to safeguard to make sure you're going to be successful.
Right. So I did this thing. It's called the hierarchy of financial needs.
Oh, I love that. I saw it recently. Yeah.
Yeah. And so in the hierarchy of financial needs, we talk about building your financial foundation, right? And that's what you just talked about. You got to have your emergency fund in place. You got to have your savings with your emergency funds. You got to have your insurances. You got to have, just the financial foundation to make sure that you're protected against market volatility, against life uncertainties, against, tragedy, against accidents, against all these things, because those things happen, right? And I would argue a lot of people, the greatest lie in personal finance is the younger you are, the more risk you can take. And that may be true to an extent because of the fact that if you're young, you have time to make up for your mistakes.
Long time horizon.
But I would argue the younger you are, the less risk you have to take because you have time and compounding on your side.
Wow. It's a different perspective. I like that.
Right?
Yeah.
Is it fair to say that if you're young, you can have a systematic conservative approach that works predictably to achieve a desired result? Using compounding and avoiding losses and doing all these stuff, the more time you have on your side, the less risk you have to take, and you can actually implement a system to create a predictable result.
Yeah.
Fair enough?
Fair enough.
That's not what's taught.
Right.
I would argue that the time to take risk and do something bold and crazy is when you're 55 and you got 60 grand saved, right? And you only have 7 to 10 years of work left in your life. And you know that if you don't do something bold and do something risky, you got to throw a Hail Mary. You got to do something.
Yeah.
Right? You got to figure out a way to create more cash flow.
Somebody who that's all they have is 60 grand saved.
Yeah.
And it's like, hey, you got to take a shot here, or
what are you going to do?
You're headed towards a trajectory that's not going to work.
Yeah. I'm not saying that's the right thing to do either. I'm not advocating for that, by the way. But I am saying, like, the time to take risk is got to be calculated. And you got to understand calculated risk.
Yeah.
And I would argue that if you go, a lot of people say, go to school, get a job, invest in a 401k, right? A lot of times when you go to the employer, they talk about a 401k savings plan. It's a 401k investment plan. It's not a savings plan. A lot the words matter, right?
Yeah.
People talk about saving or investing like it's saving because you're saving for retirement, right? No, you're investing for retirement. Saving, you can't lose. Investing, you can. And this is the delineation. Now, I'm going to get back to the case study here.
Yeah.
When you're 25 years old, you need to save money first. You need to build that financial foundation, like you talked about. Because if you don't, what happens is you invest before saving. And which is, by the way, what 95% of this country does. What everybody does.
That's what I did.
And they feel like they're great, especially when we're in the greatest bull run of all time, like we have been. It's easy to get caught up in the hype and in the hype machine and the excitement of it all. And there's massive amounts of FOMO, right?
Yeah.
And it just happens. But the problem is, if you start investing like that before you have your foundation built, you're not an investor, you're a speculator.
Yeah.
Because when the market goes down and market cycles happen and corrections happen, if you are not prepared for those, then what happens is, and you don't have your financial foundation built, what happens is you typically wind up having to dip into negatively performing assets, right?
Yeah. Well, anything that comes up, if you don't have your foundation, all of a sudden you're robbing your compounding.
Exactly.
Exactly. Yeah.
So that's that. So now talking to 25-year-old Danny, you had the right answer. You're like, I had to build my foundation. I had to do all this stuff. Although I would bet that you go back to that time and you probably didn't do it the right way. You
Definitely did not do it the right way. Yeah.
I didn't either.
Yeah.
Okay.
When I was
Fully
in my
transparently.
20s, I was like enjoying living for the moment, spending beyond my means, doing all the classic 20.
Me too.
Yeah.
Me too. It's one of the reasons I love doing what we do. One of the reasons my favorite group of people to work with, even though they're the hardest group to work with, is 25 to 30-year-olds.
Yeah.
Because they need it the most. The impact that we can make on those people are greater than anybody else, because from a long-term generational perspective, I did a video. It's coming out. Actually, it'll be out already by the time this comes out. Mm-hmm. And I did an example of showing somebody doing $1,000 a month.
Okay.
Starting at 25.
Yeah.
And then $1,000 a month at 35 and 45 and 55 and 65, and showing the generational capacity and the liquidity, the cash, the savings, the emergency, the opportunity fund, how you can utilize it while you're alive in your 20s, 30s, 40s, 50s.
Yeah.
And the impact of what the legacy is on a generational play when we talk about buying your net worth and building
Yeah.
your cash flow.
Yeah.
When you started at 25, you would save, you'd be able to use it to buy real estate and all these things. At the end of life, you ended up with like $6 million of a guaranteed legacy.
The 25-year-old.
The 25-year-old.
6 million more, or 6 million,
6
6 million
million
total.
Like it was like 6 million
Yeah,
something. Right?
Okay.
I don't remember the exact numbers, but
Yeah.
it was a lot. When you go to the 65-year-old, guess how much it was?
Not even $1 million.
400,000. Right? And so like
Crazy.
the difference,
Yeah.
and they were using that money the entire
The
time.
entire time to build
So-
whatever they want to do. We started
right.
doing these family meetings a couple years ago. We bring the
Totally.
whole family in. We
Yeah.
go to their house and have the whole family there.
Love it.
It's amazing, man. You get to talk to the younger generations, the kids, grandkids.
amazing.
That's where we make big impact.
So going to this 25-year-old Danny,
Yeah.
the reason I love it is because now, okay, you had this need to build an emergency fund, which you probably didn't do properly. I didn't,
No.
right? So if I could go to you and talk to you and be like, hey, it's important to build this emergency fund,
Yeah.
right? It's important to have the beginnings of an opportunity fund, right? Because Danny, you have entrepreneurial aspirations.
Yeah.
You want to get into real estate. You know, you have all this stuff. Do you think it's important to have money that you have liquidity, use, and control of that's going to grow and beat inflation, that you can utilize and leverage and all these different
Yeah.
things? So when we start breaking it down, I can show you that there's no better place to save that safe, liquid, accessible capital than a whole life policy.
Yeah.
The challenge is 25-year-old Danny has to deal with all the outside noise
Yeah.
of all whole life's a bad investment.
Yeah.
Whole life is not going to get great big rates of returns. Whole life is not going to compete with your 10% return. It's not.
Yeah.
Whole life is not sexy, y'all.
Yeah.
It's not.
Yeah.
Safety is not sexy.
Yeah.
But you know what is sexy? When you could pay your mortgage if something bad happens. And so your wife doesn't have to worry about your financial stability.
Yeah.
If you've ever been through financial challenges in life, which I have, which
I have as well.
he has,
Yeah.
like if you've ever been through that and you haven't had the savings, there's a reason I'm as passionate about doing this as I am.
Yeah.
I don't want anybody to have to go through what I went through in my late 20s, early 30s. Right? And so from that perspective, let's just say we start there. And I'm going to go back in a time machine and say it started there and you did it.
Yeah.
Whole life insurance is the only product that's going to grow with you as you age. That will change in the way that it helps you and serves you and helps you accomplish your financial goals and helps you leverage out this one asset
Yeah.
to live your best life, to live your
It's
most
so
confident
true.
life.
Yeah.
So your 20s, you do your emergency fund.
Yeah.
Right? You save it. How much do you need in an emergency fund?
12 to 24 months expenses.
Okay. So, and once again, I don't believe in telling anybody what they should or shouldn't have.
Yeah, no, that
right?
I mean, I'm just answering
That's
it
you.
for me.
Yeah,
yeah, I'm
for
not
you,
saying that's for
right?
other people.
Some
Just-
people might say 6 months.
Six
Some
months,
people would say
people
12.
flex.
You say 12 to 24.
Yeah.
I think it's amazing. You're an
Yeah.
entrepreneur. You do
Yeah.
all these things. Okay,
Yeah.
perfect. So
That's
12
me
to 24.
personally. Yeah.
So when I look at this, I go, okay, Danny,
Yeah.
you're 25 years old,
Yeah.
right? What time frame would you like that in, right? Because
Right.
before we start investing, and before you can be an investor, you have to have your foundation built. Otherwise, you're just a speculator,
Yeah.
fundamentally speaking.
It's true.
Okay? So how much can you save? Let's create a plan
Mm-hmm.
for you to be able to build this financial foundation.
Yeah.
How much can you save predictably? And you don't have to give me the answer.
Sure.
But I would walk you through that.
Yeah.
And we'd come up with that and there'd be a plan.
Yeah.
Right? And so then we'd roll it out. And so let's say you do enough to have it in, say, 5 years. So now you're 30 years old. You got your foundation built, right?
Mm-hmm.
You got, let's just call it 12 months of
And where are you keeping
lifestyle
this
expenses
money? Is this in the
in your
bank?
whole life policy.
Okay, in the whole life.
Yeah,
policy.
we're paying
Okay.
your premium with it. You've got 12 months of living expenses, lifestyle,
In cash value. you get
cash
access.
value, net cash value
Okay.
in your whole life policy. Okay. So now when did you have your first kid? How old were you?
I was 26
26. So you were younger.
when I had my first kid.
Okay.
Is that right? Yeah,
It's good enough.
it's good.
So yeah, it's close.
I was 20. I think I was turning 27. Yeah.
Okay.
Yeah.
So that said,
Yeah.
life changed, right? Now you have I'm gonna pretend that you were 30 when
Okay.
you had your first kid.
I had my second
You
daughter
had
at
your
30.
okay.
Yeah.
So now you probably started thinking about it, and you're like,
Yeah.
I
Well, I'm a
need to- I
unique
need to-
case because my dad's been a life insurance
Yeah, I
agent for
know.
40 years, so
Yeah.
I grew up with whole life.
But you get what I'm saying.
Like, yeah, if I was like
Like,
not in the business,
right.
Yeah.
And so now you start thinking about it, but
Yeah.
isn't it cool? You already have the life insurance in place.
Yeah. And we did.
And it's
yeah.
cheaper.
We did.
And you have all these other benefits
Yeah.
that go with it. So now you have that in place.
Yeah.
Now you have cash value growing up in your policy.
Mm-hmm.
You can leverage that policy for real estate opportunities as market cycles happen.
Yep.
Right. So the policy and what it's the benefits, the attributes that it's providing you are growing and getting better.
Yeah.
Right. And so now you hit, say, 35, and you have an opportunity to borrow against it, leverage it for what I would call cash flow hacking, and you buy a rental property.
Explain that term for people on my channel that haven't heard that before.
Okay.
Like, yeah, cash flow hacking.
Cash flow hacking is simply the process of saving with the intent of investing. And when you save inside of a whole life insurance contract. You leverage the cash value inside of the whole life policy through policy loans, through the policy loan provision.
Yeah.
I don't believe that you should typically, I mean, it's not an absolute, but I think when we're trying to build wealth, we want to utilize the cash value loans, the policy loans, to buy cash flow producing assets. So that's where the cash flow hacking comes in. The biggest cost that we have, the biggest financial problem that everybody has in their life that most people don't understand is opportunity cost.
Yeah.
Right?
Definitely.
And if we can understand opportunity cost and we can control and mitigate opportunity cost as much as possible, that helps us accomplish our financial goals more predictably, with more certainty, with less risk.
Yeah.
Right? And
So true.
who doesn't want that? And so cash flow hacking is the process of borrowing against a whole life policy, utilizing that as a down payment on properties, on rental cash flow properties.
Yeah.
And then utilizing the cash flow from those properties to pay back the policy loans, and recapitalize your policy, and then repeat the process. And when you do that, I show you, I call it the retirement rescue plan, because like you can be completely free in 10 to 15 years, no matter where you are now, what your level of expertise is, where you're starting. But the challenge is people got to have a long-term vision, because it takes a little longer to start seeing the big results, the compound effect, right?
Right.
Sometimes people need to save for 3-4 years before they can actually invest in something. And that 3-4 years, they get a little skittish, They're like, oh, I'm not getting
Hard
results.
to stay the course.
It's hard to stay the course. You got to just follow the process,
Yeah.
But that's cash flow hacking.
Yeah.
And so what I would say is now you're 35, you can implement cash flow hacking, right? And that's awesome.
Yeah.
And now a different form of cash flow hacking, and it's not the same. I wouldn't call it cash flow hacking really, because you're not buying cash flow producing assets, but your kids are going to grow. Kids are growing, right? They're going to go to college, maybe, maybe. If they do, or if maybe for me, you're like me, I want my kids to go, if they don't want to go to college, I'm going to encourage them not to go to college, in fact.
Yeah.
I'd rather them go mentor with somebody.
Yeah, we
and
are too.
I'd rather pay an entrepreneur $30,000 a year to mentor my kid.
Yeah.
You know what I mean?
That's a great program, by the way. What a great opportunity to go work under somebody, mentor, and then learn a craft.
It's way better than college. I could go
Yeah.
sit in a school like I did and learn from a business professor that never ran a business. That's cool. But your kids, the cool part about having your money in a whole life policy is that if you're either going to pay cash for college or for that mentorship or whatever, but if you're like me, you want to be able to do something.
Yeah.
There's opportunity costs when you spend
there's
that
something
dollar.
there, by the way. I don't want to go off on this tangent, but I think that could be. I'm not really big on. There's a lot of coaching programs that I've purchased that I wasn't super crazy about once I got into it. Like high ticket coaching.
Okay.
That would be a really cool program for
totally.
somebody like entrepreneurs to start giving back and saying, hey, you can just pay me a fraction of what you pay for tuition, but what they'll learn in that time.
Oh, totally.
So incredible.
Totally.
And meaningful. There's something there.
100%.
It's another video.
Yeah, it's a different video. But the point is the opportunity cost.
Yeah.
Right? When you, like for me or you, when we got to pay for our kids' college or for that mentorship or for whatever professional program or maybe buy their first real estate property, like give them capitalization to do that. Like whatever it winds up being, I'm hoping my kids will let me mentor them, but who knows? If they're anything like I was, they're not going to listen to their parents. They're going to go do, listen to somebody else.
Yeah.
But that said, controlling that opportunity cost. So being able to leverage the cash value in your policy
Yeah.
for loans and then manage the cash flow of that after the fact is a beautiful, beautiful
Well, and let's
way of
touch on
handling
that.
it.
It's so important you bring up college planning. Everybody always thinks college planning with whole life is just buy whole life.
Yeah.
But the reality is people don't realize what an impact on your retirement, those
Oh, totally.
large portions coming out, coming out for college have an impact on the stability of your retirement. If you have, that's a big challenge for people. So
Well, not only that, I did
Yeah.
a really good video 7 years ago, 8 years ago, and it's still up, and it's like still. I haven't even tried to redo it because it's so good. Like I'm not gonna do better than this, so I'm just gonna keep it
masterpiece.
there. It's pretty awesome. It's like an hour and 30-minute webinar,
Okay.
and it's all about how to save on college, not just for college.
Wow. That's a
And-
good video. Everybody should go watch that when they're done with this.
It's awesome.
Yeah.
So the idea is a lot of people, when we start planning for our kids' college, there's
Yeah.
this thing called the expected family contribution. Expected family contribution is on the FAFSA, and it dictates how much you're going to be expected to contribute to your kids' tuition every single year. And so I don't know if you know this or not, but that number or the amount of financial aid you get, whether it's grants, loans, Parent Plus loans, like all the different types of loans that you get to access, is going to be based on your EFC. How much you're supposed to come out of pocket is based on your EFC. Your EFC is going to be dictated based on a formula based on your income, which is the greatest portion of it, which if you're an entrepreneur, you have the ability to kind of manage cash flows for several years. It's a 2-year period beforehand. So planning is a real deal.
Yeah.
Get ahead of it. So there's that. But then where you save your money as well is a big thing. If you have your money in brokerage accounts, in 529 accounts, all this stuff,
Which I always think is ironic that that has such an impact when that's the college.
it's not an accident.
Yeah.
Like,
Right.
it's not an accident. It's a scam. Like,
Yeah.
I know it's a bold statement, but like
That's
the whole
pretty bold.
college process, and they want you to pay more. Like
Huge business.
you need to learn how to work the system, or the system is going to work you.
Yeah.
Like, period.
Yeah.
And so when you save in a 529 account, that money is 100% on your EFC going to be increasing
use
your
it.
they're going to use it. And so by having your money in a whole life policy, you may not have the same returns as 529 account.
Yeah.
But you're going to have more stability. What happens? I mean, you're not going to have the same returns, but what happens if you have your money in a 529 and the market crashes 30% the year before your kids go to college? That sucks too.
What
right?
happens if they don't go to college?
What happens if they don't go to college, right?
Yeah.
So having your money in a whole life policy is going to provide more flexibility.
Yeah.
But here's the beauty. It doesn't count against you on your EFC.
Yeah. And then let's say you're at a phase in life where you're maybe 10, 15 years out from your retirement.
Yeah.
How's that have an impact to make sure that people will be able to, have that money still for their future net worth and
For
ability
sure.
in retirement?
Yeah, I mean, it's amazing that you can have your money while they're in college, and rather than paying the banks, rather than paying the schools, you're recapitalizing. You're using that cash flow from your income
Yeah.
to pay back a loan into your policy that's recapitalizing your retirement account effectively, or your
Yeah.
volatility buffer in retirement
Yeah.
is the way that we would look at it,
Right.
right? The bond portion of your portfolio
Yeah.
effectively in your retirement.
Yeah.
And you're doing that, and all the while, you've been able to do that just because you understood the expensive opportunity cost and what
Yeah.
you could do to control that opportunity cost
What-
by having this.
What I love about cash flow hacking is everybody always thinks real estate, which
Yeah.
is obviously a
Yeah.
cash flow producing asset. But I think of cash flow in terms of retirement because
Yeah.
my background's retirement.
Totally.
That's what I focus on. And so
Yeah.
it's like there's another way you could use cash flow hacking
Totally.
to help secure future cash flows. For
Well, I am
retirement.
writing the
I
new
mean,
book.
Okay, there you go. It's
It's
Spoiler.
expanding. Yeah, exactly. So,
Nice. You know what I mentioned at the beginning of this video, Chris, like you were a mentor to me in this space and
Yeah.
whole life. And I think the best thing I've learned from you by far is conviction.
oh,
Being
Yeah.
excited about what you're doing, being enthusiastic and being, mission driven about serving people with this. So
I love it.
yeah,
It's so much fun.
it's a great asset. So oh, go ahead.
No, go ahead. Go
I
ahead.
was
go
saying
ahead.
I had a little bit of a different upbringing with
Okay.
whole life because, my dad worked for Met in the 80s.
Yeah.
So he used whole life. Whole life was a big part of his business,
Mm-hmm.
not only from what he offered, but just he used whole life as an entrepreneur. And I got to see that
Nice.
firsthand growing up. So we grew up
amazing.
with policies. He bought policies on all of us when we started. So, I mean, we had
Cool.
whole life,
That's awesome.
growing up. And as a part of it, I was very fortunate.
You
But
had a
not
cooler
everybody,
parent than me.
not everybody has that you know,
No,
it's like
they're
if your
not
dad's a
everybody's as
dentist,
fortunate.
you're gonna floss.
You're
you
gonna
know?
have, you're
Like, yeah.
totally.
So we had a whole life.
That's awesome. No,
Yeah.
I didn't have that, and I think that's why I'm so convicted and so
Yeah.
passionate is because when I discovered this thing that I knew I could kind of, I think of the movie A Knight's Tale. Have you ever seen that?
Yeah.
With Heath Ledger,
Yeah.
right? And just like he was this kid, from the ghetto basically,
Yeah.
and he wanted to become a knight, and he found a path to be able to do it, and
Yeah.
that's how I feel about this. Is like I grew up with not much, and just knowing that I didn't just find a way for me to be successful, but I found systems and processes that everybody could do it, and there's zero reason that people can't do it.
Yeah.
Zero. The only reason that you don't do it is because you don't believe in yourself. Like that's it, which is a whole different conversation. But that's it. And when I found this, and that's why I'm saying the beauty about this is that it grows with you, right? So now we're at college for our kids. Now our kids graduate college, right? And now we hit like kind of pre-retirement.
Yeah.
And we're wanting to like make sure our things capitalize. We're probably still leveraging the cash value for more real estate a little bit and using the cash flow. We're still cash flow hacking and trying to build up and create that cash flow to improve our, lifestyle at retirement. Or maybe we hit financial freedom faster and retirement is a dead, concept and we're just looking for financial freedom.
Yeah.
Which is what I coach, like don't.
Well, and let me ask you about that because you have this movement out there, F.I.R.E.
Yeah.
Right?
But that's, yeah.
You grimaced when I said that.
Yeah.
Okay. But how does this apply to that, right? Because people are trying to buy properties to retire early and have financial freedom. How can you use whole life as a foundation?
My problem with F.I.R.E.
What is it?
My problem with F.I.R.E.
Yeah.
is that it's,
I knew you'd have one. I just
my
didn't
my
know.
problem with F.I.R.E. is that it's all about like if you I'm gonna just like talk to you like you're a guy doing F.I.R.E. right?
Okay, yeah.
Your goal is to get financially free, financially independent, retire early,
yeah.
right? You want to retire early. Why? For what? Do you know how many? Go look how many people that have done this F.I.R.E. movement and they're like 3 years into it. They're like, life is purposeless.
Yeah.
There's no, what am I doing? We're bored. We're like, whatever. You need a purpose in life. There's a reason people die when they retire is because they don't know what the hell they're going to do when they retire.
Yeah.
They don't want to be stuck in their house with their spouse because they've used work as an escape from their home for so long.
It's so true.
And they're not fulfilled in their own damn life.
Yeah.
And so the reason I love what we do
Yeah.
and the cash flow hacking is because it forces you to be intentional about your money and utilize money as a tool to create the life that you want to live, period. Like whatever that is. To me, financially free just means you have enough money to do whatever the hell you want, to cover your lifestyle expenses. I say there's two different tipping points in our financial life. When you hit your freedom number, when you have enough free and clear cash flow coming in, so you're job optional.
Job optional.
Job optional.
Yeah.
You don't have to go to work. If you love your job, by all means, keep going.
Yeah.
I bet you 99% of the people out there, if you had enough money, think about this. If you had enough cash flow coming in right now and you knew that cash flow would be there predictably for the rest of your life, would you go to work tomorrow?
Right. I call
No.
it playing the retirement game.
Yeah.
Everybody's got that number.
They're
like,
not
if I just
gonna do
had
it.
10 grand a month, then
And I would argue if the answer is no,
Yeah.
you hate your job. Like you don't want to be there.
Yeah.
You're living an unfulfilled life in that way.
Right.
Right? So the beauty about what we do is it shows people a path that they can actually create fulfillment intentionally and be more intentional. Life 180 is living intentionally for excellence. 180 is about turning the results in your life around and actually being intentional about creating the life that you want to live. That's it.
Yeah.
And we like the whole life insurance just happens to be the tool that I believe is a foundational asset. It's not the only thing,
Right.
but it's the foundation
Yeah.
of everything that we do, right? Because it's going to be a self-completing plan.
Yeah.
It's the responsible foundation,
Yeah.
right? And so now we hit retirement and we're able to utilize this policy as a volatility buffer, right?
Yeah.
You want to explain the volatility buffer?
So a volatility buffer is going to be a great place you can go to if you have, volatility in your portfolio. You don't want to take from a down asset class. You can pull from another asset class
Right.
that's stable to allow your, the
Right.
volatility to recover and make a more opportune time to continue your withdrawals.
And sequence of return risk
Yeah,
is a huge deal.
that's a huge problem in
And so
retirement.
having
And
the volatility buffer for that.
yeah, it helps you to manage, when you receive your returns, because average rates of return in retirement don't matter.
Yeah.
Everybody always thinks it's all about average rates of return. That's what we always learn in terms of saving for retirement. But when you get into retirement, all the rules change.
Yeah.
And it's no longer average rate of returns, it's sequence of returns.
Right.
And so if you have down years early on in your retirement, there's a lot of scenarios that you could have very problematic withdrawals much later
Big
on.
time.
So average returns matter, and having that whole life, I mean, we sat through a great talk together last year from that PhD.
Tom Wall.
Tom Wall.
He's amazing.
Incredible. All about
Yep.
how whole life is a great buffer for.
I was talking to Tom the other day.
Yeah.
And he just finished a study, and we're probably going to hear about it at the mastermind. Are you going up to the end asset
Oh,
mastermind? Okay. So
I'll see you later this week.
perfect. Oh, yeah, that's awesome. We're going to see each other again.
Yeah.
So he did this study, and in that study, he showed, and he did every rolling 10-year period and every rolling 30-year period for the last, I think, 90 years. And every 10-year period, bonds outperformed whole life insurance for every 10-year period. So when people go, why would I invest? Why would I put money in a whole life policy? I just put it in bonds.
Right.
Every 30-year period for the last 90 years, I think, maybe 80 or 90, whatever, whole life beat bonds.
Every rolling 30-year period for the last 90 years.
Rolling 30-year period, whole life beat bonds. Think about that. Like, this is coming from a retirement income PhD.
Yeah.
Okay. So like,
That's amazing.
When you realize that the reason people fail with money is because they don't think long enough term.
Yeah.
They're not intentional enough about what their end game is. You don't build a business without having an exit strategy. If you do, you can build it, but you're going to build it poorly.
Right.
The best businesses in the world begin with the end in mind. They have an exit strategy.
Yeah.
The best financial plans in the world have an exit strategy. And the thing we know is we're going to exit this place at some point in time.
It's, no one's getting out of this alive.
Nope.
Yeah.
And so the thing I love about it now is that we have that. Yeah. And so it's there as a volatility buffer.
Yeah. I want to touch on one piece you said before.
Ahead.
So
Go ahead.
I remember, I can remember this so clearly when I first got in the industry. I went to my dad.
Yeah.
And he was big on whole life because he worked for MetLife and he owned whole life and all my family had whole life.
Love it.
And I went to him and I said, Dad, I just don't get it. Like, I don't like I could be investing this money and it'd be growing much better.
Yeah.
I said, why whole life? And you know what he told me?
No.
He said, the reason why whole life's so important is it's the thing you're actually going to have one day when you need it. Like it'll be there.
So
It'll actually be there. And I got to see that through him, and that got me some excitement about it because I'm like, he's like, you just don't understand this yet. It seems shiny and exciting that, you can invest and make money. He goes, but when push comes to shove, that whole life policy will be there for you.
do you realize how lucky you are?
I'm so blessed.
To have
My
your dad?
is such a great mentor.
That's awesome.
Very, very blessed to get to work with him. But now it's cool because he's on the cusp of his retirement.
Yeah.
Getting to see his fully funded whole life policies kicking butt.
Oh, that's cool.
Creating dividends for him. Like, it's a big part of his retirement.
That's cool.
Is the whole life policies he
That's
builds.
super cool.
It's cool to see it
I love
to
seeing that.
completion,
And now we're talking about the living benefits. We've talked a lot about those in the term policy, so I'm not going to go into those in depth. Go back and watch that.
If you don't know what living benefits are or why they're important, they can apply to whole life, just like they can to term, but we cover that in term. So
Yep, we covered that as well.
We actually
in more
need to
depth.
get into the framework of whole life.
Yeah. Well, but to me, this is the like.
Let's talk some nuts and bolts. for people.
Let me finish this real
Okay,
quick.
go ahead.
So the reason I love it is because it grows with you, and I'll do the summary of what we just talked about for the last half hour.
Cool.
But I like how we talked about it. But
I love how we talked about it.
when you're young, buy it because it's an emergency fund.
Okay.
As you save your emergency fund and capitalize that, then it becomes an opportunity fund. Keep capitalizing it to make sure you capitalize your opportunity fund, and you find opportunity.
Yep.
The more money that you have, liquid, accessible, cash is king. Access to capital is king.
Yeah.
Right? Like, that's the idea.
Right.
Then you have your foundation built, and you can actually start to invest, whether it's stocks, whether it's real estate, whether it's businesses, whatever. I would really encourage everybody to think about what your like investor DNA is, and think about like what your unique abilities are.
Yeah.
And stick to that,
Very important.
Yep. I would say that's a whole different video again, probably. do that. But then as you grow, now you have the life insurance. You start a family.
Yeah.
It's growing. It's there for college for your kids. It's there to keep building more cash flow in your life, real estate investing, business, stuff like that.
Yeah.
Then you hit retirement. It's a volatility buffer. You have the living benefits, and then it's going to pass your
That's so
legacy
crazy.
on
So
a tax-free basis. So it grew
starts-
with you
yeah,
for all
totally
life.
get that. That framework is so cool. So it starts as the emergency fund.
Yeah.
Goes the opportunity fund, handles all of life's challenges, then transfers all back.
It's the only financial product.
Wow.
The only.
That's
Danny,
it right there.
Danny, it's the only financial product in the world that evolves as you do. That's why I always say, people ask me why I love whole life, and you're asking to get to the nuts and bolts, but I had to say this
No,
first.
I love this.
The reason I'm so passionate about this is because I truly believe, and I do, that the reason I love this so much is because it's the only financial product in the world that forces you to become who you need to become to live the life that you want to live.
I love being around you when you get on a video that you're excited about. The energy is like crazy. Like you light up about this.
I mean, it's like, think about it.
It's unreal.
What I love with people is like people come to me and they ask for coaching all the time.
Yeah.
I get like multiple people a week. Can you coach me? Can you coach me? And like
These are entrepreneurs.
real estate investors, life insurance agents, like all over the map, right? And people ask and they're like, can you coach me? And it's just like, we talk about some results, we talk about where they are. And the thing that I always like notice is like, and people are a bit delusional about why they are where they are. I hear a lot of excuses and a lot of like things that have happened, a lot of victim kind of things. And it's just like, I got news for you. If you're watching this right now, I really encourage you to do your own personal deep dive audit and think about, why am I where I am?
Yeah.
And I got news for you. You are where you are because of who you are. Period. That's the reason. That's different for everybody. I am, you are. And there's no judgment behind that at all.
Yeah.
A lot of people say, I want this or I want that. I got news for you. I want more stuff. I think that's a healthy drive to be very content with what you have and be happy about what you have, but also have a responsibility to take it to the next level. Like, to me, that's what it's all about.
Oh, yeah.
And that's why I love whole life insurance, is it allows you to do that, and it forces you to build your finances and build your life in a way and be intentional about not just what you're doing right now, but why are you doing it?
Yeah.
And you are where you are because of who you are. And if you want to be like create a different life, you have to become somebody different. And what's your strategy for that? And the reason I don't like investing, the reason I don't like stocks and mutual funds and all that isn't because, and now I think they're all mismarketed about the returns and all that stuff, but that's not why I don't like them. It's because when I put money into a mutual fund or a stock or somebody else's company, I'm giving up control of one of the most precious resources that I have in this capital that I could utilize to invest in me, my business, myself, for me to become who I need to be to create the life that I want to live.
Wow.
So it's out of alignment with my values and beliefs. That's it. So by having your money in a whole life policy, your dad said it perfectly. That money's going to be there.
Yeah.
Right? When you need it, when you find an opportunity, whatever that opportunity is.
Yeah.
I've used it to spend 6 figures on coaching, mentorship. I've used it for events. I've used it on masterminds. I've used it on real estate. I've used it like, my life would not be where I am had it not been for these products and processes and strategies and all these things.
And what I love about that is sometimes those things work out. Like when you invest in yourself, it's a lot more risk because you're investing in you. It's good. But if you invest in something that doesn't work out,
sure,
you have the whole life. You can build it back and continue on.
100%. And it's like, think about it this way: if you go to a bank, first of all, you're going to start small. Right?
Right.
You're not going to start by doing $25,000 programs. You're going to start by going to a $1,000 event.
Yeah.
Yeah. Maybe spend
$500
or $500 event. Maybe you'll spend $3,000 hotel, flights, event, all that stuff. Right. So you're going to start fairly small.
Yeah.
Right. And so you do that. You invest in yourself. You grow and you grow and you go to another one. You go to another one. And one of these times, maybe the first couple times, it's going to not work out. Right. So what are the options? You put it on a credit card and you pay 20-something% interest. Right? So when we talk about whole life doesn't get good returns, well, what's a return of avoiding 20% interest expenses, paying back these things.
Yeah.
Right? It's huge.
Massive.
It's huge.
Yeah.
That's financial efficiency. That's opportunity cost.
Right.
These are things that you need to do in life anyway. If your financial plan doesn't take life into consideration, it's not just like, what am I going to have for retirement?
Right.
If your financial strategy doesn't take your unique investor DNA life into consideration, it's a jacked up plan.
Yeah.
You know? And so like,
well, it's just not alignment with what you really need to have happen. It's.
but if it's not in alignment, it's messed up.
Right.
The reason people fail with their money is because their money is not in alignment with their values and beliefs. The human brain will only allow you to put 100% of effort into something that you believe with 100% certainty you have the chance or the potential of being successful with.
Yeah.
Period. You don't have to have guarantees that you're going to be successful, but you have to believe. Otherwise, you're not going to give it everything you have. You know? And that's why people fail. Because they're putting their money in 401ks that they don't understand. They're putting their money into investment accounts with advisors that tell you you're too dumb to understand it, so just trust me. And you buy that bullshit. And you believe it. And you do it. You gotta take the bull by the horns. You gotta take responsibility for your own lives. I talk about faith, the 5 F's of life: faith, family, fitness, finance, and freedom. Everybody wants freedom, right? Yeah. That's what we're all for.
Right.
It's what retirement is. Why wait for retirement? Why feel like you gotta wait 40 years and work for 40 years to get there at 65?
Yeah.
You know? But I don't believe there is freedom without having a good relationship with God, your higher power, whatever that is to you. Mm-hmm. I don't believe there is freedom without good relationships with the people that we love the most in our family and friends.
Yeah.
I don't believe there is freedom without health, fitness. I don't believe you can attain freedom without a good relationship with money and utilizing money and your finances as a tool.
Yeah.
If you get the money right, and this is why I love what I do so much and what we do so much, is that if we can teach people just to fix the 4th F of finances, is it fair to say if you had that number down, your marriage would probably be a little bit better? More marriages end in divorce because of financial stress than any other thing.
Yep.
Right?
Yep.
Fix your finances, a lot of marriages are going to be fixed. If you had more money, my wife and I are taking a month road trip right now across the country just because we can. How many marriages do you think
need that?
A
lot.
Right?
Yeah.
It would change everything.
Yeah.
Right? So you fix your...
How many marriages just need the absence of, arguing over tiny little purchases day to day?
Totally.
I mean, a lot.
So you fix your finances,
yeah.
Marriages get fixed. How many people believe in tithing? How many people believe in, contributing to organizations that they believe in?
Yeah.
Right? You have good finances and you don't have to stress at it. How cool would it be to be able to tithe or give abundantly? Right? How cool, your fitness, your health.
Yeah.
How cool is it to be able to go to the grocery store and be able to buy organic and natural and healthy and not processed and all this stuff?
That's one of the things I'm most proud of, is buying organic food for my kids.
What we do, the importance of it is aligning people's money with their values and beliefs.
Yeah.
So they can align all those things. The problem is we silo life. Mm-hmm. And people silo their own stuff. And they're like, oh, I got my fitness, I got my health, I'm going to get a gym membership, I'm going to go to church, and I'm going to, like all these things.
Yeah.
But if we could just help people realize how it all connects and how just getting this one thing right with the money and making sure that you're utilizing money as a tool the way it was meant to be to create the life that you want to live, to make sure that your money is in alignment with your values and beliefs in all these other areas and you're intentional about that. That's why I love Whole Life.
Wow. That's awesome. That's why I said you should take the lead on this video right there. That was so good. I was just like enjoying this entire thing. That's amazing, man.
So it's
the way you tied it together was beautiful. The framework was beautiful.
So do we need technicals? You want technicals?
I think a little. Well, it's hard to go technical when you go like, I'm inspired. I'm excited. I want to go.
I mean, but people say this all the time.
Yeah.
So I'm doing a talk at the And Asset Mastermind.
Yeah, I'm excited
about Whole Life versus IUL.
Okay.
Right?
Is there going to be another debate?
No, I don't know. I'll
that
debate.
Was fun to watch.
I'll debate anybody anytime.
I know.
But I'm going to talk about my talk this year is on Whole Life, why it's better than IUL from a fundamental values and beliefs perspective.
So Chris, I don't know if we have to go to like the whole nuts and bolts, right? Because I think people watching this got a really good glimpse of where you can use it and why it's so important. The why, which is beginning with the end in mind.
If you don't start with that, then nothing else matters.
So
that's why I focus on it.
But what is the difference between Whole Life and IUL?
Control.
I mean, technically speaking, like break down like what, so people who don't know, like what.
So the biggest difference is whole life is on a fixed chassis, a guaranteed chassis.
Okay.
And IUL is on an annual renewable term chassis. IUL is on a UL chassis, which UL, Universal Life, was created in the early 80s. And it's got a history of calamity, and it's a true story.
Yeah.
With lapse policies and all these challenges. And basically all they did was take the the UL chassis platform, which is annual renewable term, which makes it cheaper in the ongoing years, but it makes it more expensive in the later years. On. And the reality is, if we're buying a permanent policy, we want the stability and security later in life.
So, right, which makes it really dangerous for retirement when you're on an annual renewable term.
Right.
So
especially once you start taking loans against it for tax-free income and stuff like that, it gets really
because I'm thinking about all different people that are watching this, right? So for people who don't know the mechanics of it, right, you can develop a cash value in both of these types of policies. Whole life's it can offer a dividend, and it's going to have some type of underlying guarantee from the company.
Yep.
And then the universal and the death benefit is not annual renewable term.
You know, the death benefit of a whole life policy is not annual renewable term.
And so when you have a universal life policy, also can develop a cash value. Company provides an interest rate if it's a UL, but we're talking about index universal, so it's indexed to an underlying indice. That's how it gets its performance. Right. Also has
through call options.
Right.
I don't want people to think they're investing in index options or index.
They use options, and then you have annual renewable terms. So you have a death benefit that you can choose an option.
Sure.
A or B.
Sure.
Right? A level or increasing.
Yep.
And then when you say control, what do you mean by you have more control with whole life?
Control.
I mean, I know what you mean, but I want to share this
with
people.
See, control is like as soon as I pay a premium with a whole life policy, the obligation and the risk and the responsibility is on the insurance company to meet the contractual obligations to me.
Yeah.
I'm the benefactor of that policy. I'm a business partner with the whole life policy company, with the participating mutual company. And so as long as that company is successful, I'm successful. That's an amazing thing.
Yeah.
Considering these are the most financially stable companies in the history of the world.
They've been around for like 180
years.
Yeah.
180 years.
Yeah. Well, it would depend on companies. Some have been around 180 years. Yeah.
Yeah.
But a long time.
Yeah. And so when we look at that, that's great. When we look at IUL, you're no longer a business partner. You're a profit center for them.
Big difference.
Big difference. And that fundamentally is the biggest difference. Why we can look at illustrations. We could look at all these things.
Sure.
I don't even care about that.
Yeah.
I care about, fundamentally speaking, is my money in alignment with my values and beliefs. This is the biggest. How long have we gone? Okay, so the biggest thing we could do like a 4-hour podcast. You get me going on this stuff. Like we could do. Well, I'll say this. My biggest challenge with what I see in the IUL space right now as it pertains to whole life and why I keep I'm going to call it this guy, the 3T Warrior guy. Have you ever?
I've never heard of him. No.
He actually lives here in Mesa.
Oh, really?
Yeah. And we're in Gilbert right now filming this.
Okay.
So if you're seeing this, JV, reach out to me.
Who's JV, the 3T Warrior?
He's the 3T Warrior guy. And he's been dodging me.
Oh, yes?
Oh, yeah. Because he sells IUL.
Remember, I told you when you fly back, I still have to live here.
I don't care. Not my problem. I will fly back for this. If he said, Chris, I have 2 days notice, I'll fly back.
Can I tell you the truth? I've never told you this. I would love to be the host for one of your debates.
Let's do it.
I would love to get you and like someone else on the IUL side together.
And get David McKnight to debate me live, and I will do it in a heartbeat.
A dream come true.
Come to Puerto Rico, and
I would fly to Puerto Rico for that.
Let's do it. That'd be awesome.
Okay.
So,
dibs. By the way, I'm calling dibs on. I want to be that host.
You and Caleb are gonna like have a cage match over who gets to do it.
Does he want to do it too?
He does. You guys could do it together.
I'm gonna reach out to him at the event and tell him, hey, Caleb, I want to be in on that.
It'll be like an American Idol debate kind of style.
We should have 3 panelists.
Yeah, there you go.
Okay.
Perfect.
Who would be number 3?
I don't know.
Okay.
Garrett Gunderson.
Comment down. Ooh, Garrett Gunderson.
Garrett would do it too.
You don't. I mean, Garrett would be better than me, I would argue, because he's a legend. I love Garrett, but like, I think you want somebody. You want the judges to be, mixed. I guess. Because you got 3 whole life guys there. If you put Caleb.
No, I don't know if it's a judgment. I think it's just asking the right critical questions to think differently.
I think the questions have to be agreed upon. That it's like objective questioning.
Sure.
It's not leaning.
Sure.
you know, to make it as good as
I mean,
possible.
to me, the debate needs to be just free flowing. Like, let's have a conversation like we're having right now,
See,
where
what
we
I'd
can
be more
challenge each
interested
other.
in is instead of seeing Garrett as a judge, I'd love to see you and Garrett
Go
against
after.
like I'd like to see a panel of a debate, right? Because that gets interesting. Because then when you're debating, there's kind of this like emotional thing that's going on. You're trying to fight. Maybe not for you. Maybe you're used to it. For me, I feel like, and we're gonna do a debate in a little bit, which will be fun. But like you're kind of confronting your own anxieties and emotions and feelings while you're trying to think of points. So other people that aren't in it on the hot seat, they can think of other ideas.
Yeah.
And like interject. So I think it'd be cool to have like a panel.
I'm in.
Okay.
I mean, I love it.
Okay.
I mean, you know, I'll talk to.
Comment down below on who you want to be on the panel and who would be judges for that.
Totally. I'm in. Like,
Okay.
my challenge, my challenge,
And tag 'em.
my challenge with people in the IUL space right
Yeah.
now is that I love a lot of what they say, meaning their reasons for what they want to do it are great. Like they've lost faith in the government, the national debt. You know, they're concerned about taxes. They're concerned about inflation. They're concerned about all these things.
Yeah.
Same talking points, right?
Yeah.
The problem is they're doing this, right? And they're selling IUL now to solve those problems, but they don't realize that they're just trading the government for the insurance company. And now instead of being a profit center for the government with taxes and qualified plans, they're now a profit center for the insurance company. The same, and a lot of people are like, oh, life insurance companies have been the most stable companies in the world. You're right, they have for whole life insurance. Absolutely. And when you buy a whole life policy, you're a business partner and you're successful as long as they are. But with IUL, you're a profit center the same way as you were with UL, the first iteration with preceded IUL.
Yeah.
And that was a bloodbath for the policyholders. And so the difference is, so what it drives me nuts is seeing all these people like this 3T Warrior guy. He's a big crypto guy. He's all, get out of the dollar, get out of this, get out of that, blah, blah, blah. Now he's starting to sell IUL.
As like
and he
the
joined World
underlying-
Financial Group.
Okay. Oh,
Which
gosh.
you know how that fires me up. But he's selling IUL like it's a solution that all crypto investors should do it because it's this great thing. And it's like, he doesn't even realize how out of alignment with his values and beliefs.
Yeah.
And I could say I know that because I know I watch his videos. I see what he talks about all the time.
Yeah.
And then I hear him talk about IU and I'm like, do not realize how jacked up what you're saying is right now. And like you don't, what it tells me is he doesn't even understand it enough to even know what he's talking about, yet he's doing it. And he's going to hurt a lot of people.
And how many people get into the IUL game and they're early on in their career, they don't understand it and they're like going to town.
I did it for 4 years before I got out of it.
I did too.
You know?
Yeah. Everybody, I think, learns. Well,
you're like my favorite rescue story from the IUL space.
Thanks. I appreciate it.
I love it.
Yeah,
I love it.
credit you for that, man. I appreciate you putting your arm around me.
That's awesome.
And
well,
help me out with that. But you know what is interesting, Chris? Let me ask you two questions. This is what I just thought of when I was talking to you.
Yeah.
You wrote the foreword for the new Rockefeller book for Garrett Gunderson.
I did. Yeah.
Do the Rockefellers use, which one do they use? Whole life or IUL?
Whole life, 100% of the time. Okay. So in fact, I'll tell you this. So Garrett and I were filming at his house.
Okay.
And
I love those videos, by the way. Those are great.
Thank you. Yeah, no, it's awesome. We're gonna film.
I think I enjoyed that series more than anything I've enjoyed on YouTube. As far as the series goes,
awesome.
Oh, wow, yeah.
Yeah, that was probably my most fun I've ever had.
Yeah.
Like filming. I'm having a lot of fun right now. Too.
I'm having fun too.
But I was filming with Garrett, and in between takes, in videos, whatever, we were talking about his book, the What Would the Rockefellers Do? And this was a year ago, maybe. And in it, I started asking him, like, how do you feel about the fact that all these agents are using the Rockefeller book to sell IUL? He's like, they're not doing that. I'm like, they're absolutely doing that.
He didn't even know?
Didn't even know.
That's crazy.
I go, they're absolutely doing that. I'm like,
totally.
And I'm like, why didn't you put a thing in there saying that you can't use IUL for this? Like you're adamant, and they're adamant, like they can't do it.
I bet that really bugged him.
It bugged him. That's why he wrote the new book. It's because of that conversation.
You serious?
He wrote.
That's
because
crazy.
of that, you know.
Well, how many people use?
And I'm sure he wanted to do a couple.
IUL, and they go, "Oh,
too
yeah,
many.
It was just written before IUL."
Oh, totally. It's jacked up. So he rewrote the new book in large part, and he put a whole section in there in the new book that's coming out on why you can't use IUL for the Rockefeller method.
So that way, any agent that's trying to use it to sell, they can't do it because the person will read it and go.
Exactly. Yeah, it's pretty awesome.
Amazing.
So. It's
you know what else? The second question I was going to ask you was, we talked about this before you got here. How many people we're running into online who have messed up IULs that are like panic mode.
Oh my God.
You know, that are like
Yeah.
5-6 years into it and going, oh my gosh, what happened to this? I've never seen that with whole life. I've never run into anybody. I'm not saying it couldn't happen.
No. Here,
but I'm just saying at this point in my career, 13 years in, I've run into many people that came to me with IULs that were like, this is broken. I've never met anybody yet.
I love doing videos with you because you bring up these points and it's just like awesome. So
well, I'm in the field every day. So
this is what I see.
25 people a week.
This is what I see, and this is why I love whole life.
Yeah.
You can screw up both. Okay.
For sure.
Okay.
I've seen
whole life policies screwed up.
Definitely.
And what does a bad whole life policy look like? It means it's not in alignment with my values and beliefs, meaning I wanted cash now, right? But if let's say I screwed up a whole life policy and an IUL, let's say I screwed them up equally poorly, right?
Well, it's hard to, yes, I get what you're saying.
But let's say design-wise.
Design-wise, yeah.
Right? So whole life, like let's say the IUL has no cash value for the first 5 years. The whole life has very little cash value for the first 3 to 5 years, right? Because it's all base, 100% base policy.
Yep.
Which is what I mean. That's as bad as it gets on the whole life side.
Yep.
Right.
Right.
100% base.
Yep.
And then with an IUL, it's funded at target, and it doesn't have much cash value for the first couple of years. It's a target funded IUL and a base whole life is pretty comparable.
Yeah, that's how you're going to
right?
make it.
The difference is
yeah,
time fixes all problems with whole life. Okay? If I have a whole life policy, time, the longer it is, the more stable it gets, the more efficient it becomes. Time solves all problems with whole life. Time amplifies all problems with IUL.
I would say from seeing enough illustrations, that is definitely true.
So
my stomach dropped when you said that, and I'm like, man, you would not want to be in that IUL bucket,
no,
10, 15 years down the road.
Not at all. And that's why I'm so passionate. Everybody's like, why do you create so much IUL content when you don't sell it? When you're like, why do you spend so much time railing against it? I'm not railing against it. I'm trying to protect people because I know how many people have these right now. Hundreds of thousands are buying them every year, if not millions.
Oh, it's
millions,
gobbling up market share,
right?
Well, because it's so, you go on TikTok and there's always people on there going,
I know
it's the new, and like, I think that should be the
whole
message.
life's a flip phone.
Yeah, whole life. Yeah,
IUL's an iPhone.
If you come across any video of anybody pushing any type of insurance product as if it's like this new, sexy, amazing wealth building, just skip it. Just stay away from it. I mean, it's just not. You don't need it, and they don't need to be hyped that way, and it doesn't work that way.
No, not at all.
Is that a fair statement to say?
Yeah, I
if
mean,
you come across that crap, just literally swipe and keep going.
Yeah. I mean,
don't get sucked in.
We're an hour and say 15 minutes into this video. Yeah, hour and 15 minutes into this video. This is a podcast episode. I mean, this is like
that's what this
like it.
It was foolish to think we'd do whole life in 30 minutes.
I didn't want to say it going into it. I knew it was going to go this direction.
You're laughing at me.
This is how it goes. But listen, I think this is a really. I mean, I had fun first of all, so thank you.
Thank you. Me
the
too.
conversations are great.
Yeah.
But I think it's also important. I mean, I know we didn't get into like a lot of the technicals. I've got plenty of other technical videos.
Yeah, we can.
But and what I would say is the technicals don't matter. Too many people make the mistake of trying to get technical.
Yeah.
John Maxwell says it.
Very
People
true.
don't care how much you know until they know how much you care. But once they find out how much you care, you better know something, right?
Yeah.
It goes like that with whole life. Like for you, before you get into the design, before you get into the technicals and the illustrate and like all that stuff, make sure you understand fundamentally why you're buying it, what problems you're trying to solve, how it fits into everything else. Align with everything that we talked about in this video. Not necessarily align like you have to like agree, but like really figure out what you're after, what you're trying to accomplish and all these things. And then from there, then you're going to get into the designs, you'll get into the technical stuff and you'll learn. Yeah. But philosophically and fundamentally, just make sure that your why is in alignment.
The framework you outlined from emergency fund to legacy was really all you really need.
And no matter where you are on that span, on your life curve or whatever, you can. The best time to plant a tree was 30 years ago. The next best time is right now. And that's the way I look at it.
Yeah.
You don't wait to dig the well, when you're thirsty. You dig it ahead of time. I got all these analogies. It's just
Proverbs
it's what we need to do, right? Yeah. Like it's it is what it is. That's why I love this. And there's nothing else. There's not another financial tool in the financial industry, not another product in the industry that it's as flexible, as versatile in the sense that it will grow with you. And the ironic part is it's positioned by the naysayers as the most rigid, horrible product on the face of the earth.
Yeah, and I'm gonna end with this for me, Chris. It's I've been very blessed to have a lot of mentors, including my dad and other agents. I've seen many whole life policies come to fruition and be built for. I have yet to see a completed IUL. Not that it's not there.
Right.
I'm just saying I haven't seen one.
Well, I've been doing a thing called the IUL challenge. To, like, if it does exist, I've been looking for the unicorn, and I've yet to see it.
Yeah. I mean, I'm just saying maybe there hasn't been enough time. I've seen my dad's policies. I've seen other people's policies. I've seen them built. I've seen the in-force illustrations.
Yeah.
I just haven't seen one yet.
Yeah. Yeah, it's tough. So, hopefully, one of these days the truth will come out and people will see. But
the great debate.
Yep, exactly.
You heard it here first. I'm a host.
There you go. Let's do it. David, good night. I've been calling you out for a while. Let's do it.
Oh,
I will fly to Puerto Rico. I'll take a ferry to Puerto Rico. I'm like his neighbor now. We could just do it. But
it would be cool to do it in the Caribbean, like get everybody together in a nice place, get out of the heat.
Yeah. We can come to the hotel in my whatever. Just make it happen.
That'd be fun.
But I'll host you, Dave. I'll put you up. Anyway. Hopefully you guys found value in this.
Yes.
This is going long. It's one of the longer videos I've done in a long time on this, especially this format. So thank you. It was fun. I had a lot of fun.
Me too.
Didn't expect it to go this long, but hopefully you found value. If you did, like it, share it, get it out there. Subscribe, hit the bell, all that stuff. I'm going to put on the Life 180 channel, I'm going to put Danny's link down below. And go check him out. He's got an awesome channel. He's doing a lot of great content. He's growing. I really encourage you supporting him. So until next video, have a blessed, inspirational day. We'll talk soon.